Good morning, everybody. It is our usual Wednesday live, and today I don't have any partner, so it's just going to be me talking to you about the real estate market and the 5 major reasons why you should be watching it closely right now and why you should be considering the house purchase. Once again, it's not for everybody. We're talking about the people who actually can afford, but if you want to listen to the reasonings why, I'm here happy to tell you about them. So let's start from this week's market, like real estate market update. Number one thing that we're looking at is the inventory. And for those of you guys who are joining us from different states and different cities, just wanting to let you know, this market report covers Clark County, Nevada, Las Vegas metropolitan area, cities like Las Vegas, Henderson, and North Las Vegas. So first of all, we have 579 units of the new inventory coming out this week. And when we're looking at the under contract numbers, we see that there are 630 properties that went under the contract. So this is the first time in 2 months that our under contract numbers are higher than our new listings numbers. Why is that so, and why did it happen? Number one reason for it is that 6 weeks in a row we have the interest rates going down. So as of today, our conventional rates are around like 7.25. Our FHA rates are around 6.5%, and the VA rate is around 6.4%. And I'm not quoting you the rates, I'm giving you the estimates on average throughout the country with the credit score of 720. So obviously your individual interest rates can vary depending on your personal financial situation. But that said, these are the rates, and they went down. They're actually the lowest ones, and if I am not mistaken, in the last 4 months, this is the lowest that our interest rates have been. And a lot of people who were putting away their purchase right now are actually activating their home searches, and they're becoming an active buyer. So for those of you who have been still sitting and waiting and thinking that, oh, maybe I should wait a little bit more for the interest rates to go down, I would tell you one thing. We've been into this situation and this cycle of the market before, and if you need to do something, please, guys, learn from the mistakes of the others, learn from the past experiences, learn from the history. So here's the history. We had the interest rates being normal in 2019, the end of 2019. In 2020, when the pandemic started, we had first the normal interest rates, and then they went down. The moment the interest rates went down, regardless of the fact that a lot of people were losing their jobs, regardless of that fact, we actually had the sales skyrocketing, and they were skyrocketing because our interest rates were super low. So when the interest rates go lower than the previous level, and it doesn't really matter if they were at 5 and went down to 3, or if they were at 7 and went down to like 5.5 or 6. Like when we have a significant delta of drop of the interest rates, that inevitably triggers a lot of people who were regretting not buying the house previously. Actually, those people, they start to think, oh my God, this is my chance and I should buy it. And I will dig a little bit deeper into the numbers later on to explain to you how the numbers work and why we are thinking that it will inevitably be happening, that more and more people will try to get to the market. But if we once again go back to the and to the pandemic and to the low interest rates of pandemic, what we already learned from that experience is the fact that once the interest rates went down, the demand went up, and we were experiencing multiple offer situations. So when we were experiencing multiple offer situations, and many of my clients will not let me lie, what were happening is that every time we were trying to purchase the house, we had to bid over the asking price. Not only that, we had to, a lot of times, guarantee that we're going to pay a certain price if it was a finance, if it was the offer that was using financing. We had to guarantee the price. And when I say we have to guarantee the price, it means that we had to put it as one of the terms of the contract that regardless of where the appraisal value comes back at, we're going to, the buyer's going to pay the difference between the appraisal value and the purchase price of the house. What did it mean for the buyers? For the buyers, it meant that yes, they might have been saving on the interest rate and getting the lower interest rate, but a lot of times we were paying like $25,000, $30,000, $40,000. In some cases, we had the bids out that were $50,000 and $75,000 over the purchase price. So it was a significant cash investment. So for those of you guys who don't have this big pillow of cash that you are sitting on, if you are hoping to buy the house, coming in with the minimal down payment, which is a very smart thing to do right now when the market is when the market is at the bottom. And I will tell you why it is the very smart thing to do, because when the market is still like it is right now, even though it starts to pick up slowly, and we already see it on the numbers, but when the market sits still, there's a lot of advantages for the buyers. First of all, buyers are able to negotiate better deals with the sellers. I mean, we were like in my agency alone, like 98% of the buyers that we represented this year, we actually managed to get some kind of a contribution towards the closing costs or selling concession to those buyers. So that alone tells you that when you're buying in the market like it is today, you can have the low down payment loan and still have a great chance of landing a property. B, you can ask the sellers to contribute towards your closing costs. According to the Las Vegas Association of Realtors statistics, 65.5% of homes are actually going under the contract within 30 days. The rest, if we're talking about the rest, it's almost 35% of homes, or 34.5% of homes. Those homes are not they're not going under the contract within the first 30 days. So those are the sellers that you guys need to go after, that you guys need to negotiate with, to bargain with, to ask for the closing costs. And that is the privilege of today's market. Now, if you guys think that you're going to do it when the interest rates are going to be down, that is not going to happen, because our inventory is still low. If you look at our Las Vegas metropolitan area inventory throughout the year, you will see that we barely crossed the mark of 3 months. And 3 months is nothing. It is absolutely nothing for a big metropolitan area just the way as we are. So let's talk about it, guys. Do not hope that your golden chance is going to be when the interest rates are going to go down. What you need to do, if you are capable, if you can afford to buy right now, I should consider that you strongly consider, and I would strongly recommend for you to actually talk to the lender and to actually start the process. And let me give you the 5 major reasons why. First of all, the interest rates are just slowly. We only had like the first few weeks when the interest rates went down. I believe it's 5 or 6 weeks that the interest rates went down. So it is just the beginning. And instead of sitting there and waiting and thinking that, oh, like I'll wait till they bottom out, by the time they bottom out, there will be nothing left, or the multiple offers for every little shack there is, just like it was happening multiple times here in the valley before, when we had no inventory and the affordability was higher. So we have right now, the rates are the lowest that they have been in 4 months. And so it means that a lot of people are actually activating and they're taking advantage of it. A lot of people are taking advantage of those rates, making sure that they're trying to close before the end of the month. Of course, if you were trying to get the financing, it is going to be rather hard to do if you're just starting out in the process, because we only have 17 days left and we have some holidays. However, if your application has been sitting at the lender's desk for a while and you are fully underwritten, pre-approved, you still guys have a chance, and I would strongly recommend you contact your realtor and actually start take a look at what is available on the market. So another reason why you do not want to wait for the interest rates to bottom down before you're going to buy is the fact that for the past 2 years, between 2022 and 2023, Las Vegas metropolitan area, the population constantly grows. We grow about 50,000 people a year, but what happened to the housing market? So if we take an average between, let's say, 2013 and 2020, for the last 7 years, between 13 and 2020, the average number of units that we had sold per year, single-family residences, condo and townhouses, the average would be around 40,000 units. What did we sell in 2022 when the rates started to go up and they started to increase with the huge speed? It scared a lot of people. A lot of people were worried about the housing market crashing. So the number of units sold went down to 35,000 units, 35.5, 35 and a half. What happened in 2023? The number went down even more. By the last stats that we have available in November, we went down 22% year to date between the January to November 2022 to January to November 2023. Our numbers of the units sold were 22% lower. So if we average it out, it is going to be 22%. We're going to talk about total of 28,000 units will be sold this year in 2022. Now, once again, if we compare it with the average of the past 7 years, of the past normal 7 years, we would see that now we have the deficit of 13,000 homes. So we have 5,500 from 2022. Now we have 13,000 homes that are undersold, if you would, in 2023. So altogether we have 18,000 homes that are not sold. And what it means, it is not just the number of the difference. What this number represents the number of people that are actually would buy in normal conditions. So these are the families that were if they were not afraid, if they were not scared, they would be buying the homes. So 18,000, it is almost half of an average number of homes sold. What does it mean to us? It means that there is a huge amount of people and a huge amount of those loan applications that are right now laying dormant in the offices of the different bankers and loan officers, waiting for their moment. So think about it this way. If we are going to go back to average or to come closer to average, and then even let's say a quarter of those people, that a quarter of those 18,000 people is going to come in and decide to purchase, like a quarter of those people, those are like that is like think of it as like almost 5,000 people, that are 5,000 extra people that are going to come to the market and start fighting for those homes. So, and where is our inventory? Our inventory at this 3 months level. So guess what? There's not enough inventory in Las Vegas metropolitan area to serve even a quarter of the market that's been waiting. And those people who keep on moving here from the East Coast, from California, they could care less, because for them it's a change of the state, it's a change of the price tag, and for them, they do not even take this information into the consideration. They do not care how, like what the other locals were doing. They come from the East Coast, they come from California, and they look at our housing prices, they look at the price of living, at the cost of living here in Las Vegas metropolitan area, and to those people, it is way more acceptable than where they are right now. And if you guys are following me, if you're watching the news, that you will know that Las Vegas was named number 2 city in the nation where the most people moved to in October. In October alone, we were number 2 biggest city where people moved. We had 4,000 people moving, mostly from California. So what it means that the demand in Las Vegas still keeps on growing. And so what is going on with the sellers, with the market, and the purchasers? So we have 65.5% of our sellers who actually managed to go under the contract within the first 30 days. And the rest of them, more than 30% of the sellers are staying on the market. So they're still worried, they're still reading the newspapers. Everybody has their own set of fears and parameters that we operate under. So those sellers are actually open and more willing to negotiate with the buyers, to contribute towards your closing costs, to help you buy down the interest rates, to actually make some repairs. They're more willing to go with the concessions. When the market turns around, when the interest rates go down, guess what happens? What we experienced during the pandemic, there were no repairs, there were no concessions. Moreover, we couldn't even service the loans with the customers with the low down payment, like with the minimal down payments. We could never service them during the pandemic because they did not have the large amounts of cash to come up with the difference between the appraisal value and the purchase price. However, those of you who managed to buy the houses with the minimal down payments prior to the frenzy of pandemic, you actually capitalize on it, and you capitalize on it big time, because while we were experiencing the huge growth in prices and in homeowners' equity during the pandemic, those of the purchasers who purchased their homes before, let's say using an FHA loan, they were able to actually go to the bank to look at their equity, and their equity went up. They actually gained more than 22% equity with their within their properties. So those who had like FHA 3.5% down, they were able to go and either refinance with the lower interest rate and going into the conventional loans, dropping their primary mortgage insurance. Those of our customers who purchased with the 5% conventional loans, they were able to call their banks and to update their equity positions in their properties, and actually drop that mortgage insurance even without having to refinance. Those of our customers who had the VA loans, they did the streamlined refinances. What they did, they called their VA loan servicers and they requested that the streamlined refinances were done, and those were done without job verification, without the appraisals, and those were way cheaper processes than the full force refinances. So guess what? The ones who won the most in the situations of the low interest rates were not the ones who were actually purchasing, because they were fighting against the stream, they were fighting against the market, they were fighting against the frenzy of the rest of the buyers. The one who really won during the low interest rates time were the ones who already owned the properties. We're the ones who bought the properties when the interest rates were higher. We can't really speculate whether they knew or they were hoping for the interest rates to go down. The history will tell. We will never know actually if they knew or could predict the interest rates going down or not. But the fact is, and it will still stay the same, the moment the interest rates went down, they did refinance and they actually won a big time. Now all of these guys are sitting on the homes with huge equity in their pockets, in their homes, and they are actually taking advantage of the low interest rates. And that is one of the major reasons why you should not accept the flood of inventory on the market, because no matter how much down those interest rates are going to go, they're not going to reach, and I hope never we will reach the 3% interest rates, because it will mean that our economy is taking a huge dive, and I don't wish it upon any of us. So let's talk about the interest rates. Now or later, now we see the interest rates going from almost 8 to 7.25. Is it enough to refi? Yes, it is enough. For you, it's enough of a delta for you to refinance. However, when you see the downslope of the interest rates, just give it a little bit of patience. Call your lender, talk to your lender, and try to better time the market, because here's the thing. It is going down, and the experts predict that the Fed will cut the rate anywhere between 2 to 6 more times in 2024, and that the lowest of the interest rates that we should expect are going to be in October of 2024. So if this is the case, then I would please do your own research and talk to your expert advisor on lending and check with them if this is the strategy that you should take, and if you should get your paperwork ready and then pull the trigger of refinancing somewhere in the summer of 2024 or in the fall of 2024. What else is going on the market? When the interest rates going down, do not expect the builders to give you any kind of a break. if you have ever purchased from a builder in a regular inventory times, in the regular rate times, you would know that the builders are rarely giving you any concessions. So usually when you purchase from the builder pays nothing. At least here in the state of Nevada, the majority of the closing costs, 99% of the closing costs, actually is going to fall onto the buyer's shoulders, and the buyer will be responsible for it. So to give you like a ballpark estimate, so the closing cost of the same home, let's say you have a resale home, you have the same value home from the new home builder, your closing costs can be up to 3% higher when you're closing with the new home builder versus if you were closing with the resale, because resale, the half of the closing costs are going to be compensated for and paid for by the seller. In case of purchasing with the new home builder, usually the buyer is the one responsible for those closing costs. But right now, we have a huge and very interesting exception in the rules. And right now, the builders actually, for the past 8 to 9 months, the builders were very generous with consenting to closing costs, with providing us some incentives, and with helping our buyers to lower interest rate. In this year alone, we had the buyers getting the interest rate from the builders preferred lenders anywhere between 5.25% to 5.75%, when the par interest rates in a regular banks would be around 7.5%. So it's a huge difference, and to have the builder pay for it, that is an extremely rare case. So for those of you who are thinking about buying a brand new home, you should consider that at a minimum, at the time of the low interest rates, you are going to spend at least 3% more for the purchase of the property, because the builders are going to take away their incentives. But then remember another thing, when we have the increasing market, when the housing prices are on the rise, what the builders are going to do, they're going to increase their lot premiums every 2 to 6 weeks. And if the situation on the market comes back to the lowest inventory, and if nothing is available, then the builders are going to go back to the strategy of having a lottery or having the bidding wars, which again is not going to happen. You as the potential buyer, if you're trying to wait it out and make your purchase when the interest rates are down. Also remember, when you're working with if you truly believe into the interest rates going down, one of the things that you can do is to go with the builder and actually get the house that is about to be built. So let's say if we were to walk with you into the new home builders, onto the new home builders side, and you were to pick a model and pick a lot, in majority of the cases, it's going to take between 6 to 12 months to build you that brand new home. And you are actually not closing on your loan, and you're not going to lock that interest rate until up to the moment that the house is almost ready. So if you are a truly believer, and if you count on the interest rates going down, one of the things that you should do today, you should consider buying a home from the new home builder and actually started working with the lender. So one of the things that you can do is to book your lot right now, start the construction, and actually wait until the construction is over. the 6 to 8 months, let's say the construction is going to be over in, your house will be ready in August or September next year. So if the house is ready in August or September next year, one of the things that you can do, you can see what kind of interest rate did you have with the builder's lender, and are they offering? So your interest rate initially booked might be higher than the going interest rate, and then you will still have the opportunity to A, renegotiate with the lender, or B, use a different lender and take advantage of the interest rate, because if you qualified with the builder's lender, chances are you're going to qualify with any other lender. And if the interest rates are going down, it means that by the time your house is ready and it's already built out, the value of that house will be way higher than initially in January or February of 2024 when you just started the purchase process. And the builder, regardless of the fact that you might already have several $1,000s of equity by the time you're closing, the builder will not be able to do anything and to change the price on you. It just doesn't work like that. Your price will be locked as of the time of the purchase, or as of the time when you enter into the contract, which is January or February 2024. So that's one of the ways how you can take advantage of buying from the new home builder and actually waiting this period out while the house is being under the construction to actually play the idea of the interest rates going down. Now, why do we still believe that Nevada is a great state to invest in? Maybe because based on the stats of 2023, Nevada is still the #1 state with the employment growth. And if we compare the year 2022 to the year 2023, we're #1 states among the all 50 states with the employment growth. And if we look at the major factors that are driving the migration into the state, employment is the most important part. Now, also, Nevada was named #7 among the top 10 of the most of the states with the friendliest business tax. And this is important because there is a good stats out there, and I encourage you all to check it out. There are states where that the businesses are leaving, and there are states where the businesses are actually going to relocating. And Nevada is one of the top states, along with Texas, along with Florida, where businesses are actually relocate to, and that is attributed a lot to the security that the businesses get here, plus the absence of the state tax. So that's about it, guys. This is my update for you. These are my reasons why I truly believe that you should not be sitting and waiting for the interest rates to go down, but rather take advantage of purchasing the house right now. And by the time the interest rate goes down, you will have a great opportunity to refinance your home, to change your payment to a lower one, because guess what, guys? If you can afford to make the payment the way it is right now, when it is lower and it is fixed for the next 30 or maybe 15 years, depending on how much down the interest rates are going to go, you might be switching from the 30-year loan to the 15-year loan. And I hope you guys all will do so. Nevertheless, if you overpay, even if you overpay, guys, like $300, $400, $500 per month, waiting until the interest rates go down. Let's say the interest rates are gonna lower in October, and they're gonna bottom out in October. So you're going to overpay $5,000. Do you want to do that? No, you don't really want to do that, and you can tell me that $5,000 is a big amount of money, but I can tell you one thing. Based on what we experienced before, if the interest rates are going to go down by 1 or 2% from the highest of the market, then the bidding war starts, and we're going to be paying $30,000 to $40,000 more for the same house. And you might not end up getting the same house, the same house as you wanted, because now the competition is higher, now the inventory is lower, and you can't really bargain. However, right now you can go in, buy that house, you can negotiate with the seller, you can get the contribution towards the closing costs, you can get the appraisal that is over the purchase price, which actually happened to us several times this month already. So the appraisers actually know, and they see the market shifting. So if you're on the edge, if you're thinking about getting the property, do not be shy. Reach out to me, reach out to the lenders, and start your process, start considering purchasing a home. Thank you so much, guys, and I hope you have a wonderful Wednesday, and we see you here next week. Thank you. Bye.